Accounting for partnership firm. And in this module, once again, we are going to do something mathematical. Okay? Might be you will need help of your younger brother or sister in this as well. So please be attentive and have some money in your pocket as well to offer chocolate or ice cream to your younger brother and sister. Okay? Otherwise, be attentive if you don't want to offer. Well, the thing is that here we will be working out readjustment of capital balances of partners in new profit sharing ratio. Okay? So when we say readjustment of partners' capitals in new profit sharing ratio, there are a few bases based on which we work out this thing. And these are either there would be the capital balance of the old partners will become base to calculate the readjustment for capital balances, or the capital introduced by the new partner will become base for calculation of the capital of the whole organization, or the total capital balance of the new firm after admission of new partner will become base. Okay, so these are the three bases. We will use these three bases to readjust the capital balances of the partners for the business after admission of new partner. Here I will stop you over here, because might be you would be thinking that partnership firm, accounting for partnership firm is becoming difficult. Remember, when we say accounting is the same debit and credit. Please, accounting is the same debit and credit. Accounting includes maintaining books of original entry, the same journal. The books of original entry includes cash book, the same cash book. The books of original entry includes purchase journal, sales journal, purchase return journal, sales return journal, petty cash book, the same. Even 3-column cash book, bank reconciliation statement, the same. So accounting is not getting difficult. And then posting from this book of original entry to the book of secondary entry, the ledger, or maintaining the subsidiary ledgers, or preparing the control accounts, altogether same. Accounting remains same. Either you are an accountant of a sole proprietorship or an accountant of a partnership firm. Okay? So accounting is not getting difficult, please. This is the mathematics which is bothering you now. That's why I'm saying offer chocolate or ice cream to your younger brother or sister to learn that mathematics. And remember, this mathematics is not a difficult one. This is what that you have already studied in your earlier school, in grade 5, in grade 6, in grade 7. Okay? So accounting is not getting difficult, please. Remember, this is the mathematics on which you have to focus. So just see the mathematics in this practice question as well, where the old partner's capital balance is A and B, 1,212,500, whereas B is having a capital balance of 950,000. Okay, new partner is introducing capital of 400,000 in the business. Okay, so this is simple introduction of capital. Well, what is happening that A and B were sharing profits in the ratio of 3:2. C was admitted for 1/5 share in profits. After C's admission, the profit sharing ratio is 12, 8, and 5 for A, B, and C respectively. So nothing is difficult except to underline something and then to recall on time. This is the old capital. This is the amount of capital introduced by C. This is the old profit sharing ratio. And this is the new profit sharing ratio. C was admitted for 1/5. Just underline these few points and see what happens next. We have to readjust the capital of A, B, and C in new profit sharing ratio on the following basis. And the bases are, look, new profit sharing ratio is also given. It's not an issue. Simple multiplication would be done. But the bases are capital balance of the old partner is the base, number one. Or capital introduced by the new partner is the base. or the total capital balance of the firm after admission of new partner, means this is the total. So in number 1, capital balance of old partner, this was the capital balance of old partner, it will become this. Okay, instead of like using this information at this slide and discussing for nothing, let's see mathematics. Okay, so don't get afraid of this mathematics, very easy. Just focus on this base 1. Well, how much is the total amount of capital of A and B? Because number 1, capital balance of all partners, A and B, 1.2 million and 0.95 million. Okay, over here total comes to 2.162.5 million. Okay, you can read it as 2,162,500. Well, this amount of capital is representing A and B. C is coming for 1/5 share. If you will subtract 1/5 from 1, what you will get? 4/5. In simple words, if you will slice your pizza divided by 5, there will be 5 slices of your pizza. 1 slice will go to C. And how many slices will left for A and B? 4 out of 5. Okay, so this is what like you have to work out, simple mathematics. So if mathematics is difficult, just consider your pizza in front of you. Slice your pizza into 5, give 1 pizza to C. How many left for A and B? 4/5. Well, so if 2.162 million is representing 4 slices, so divide it by 4 and multiply it 5, that if it is representing the capital for the 4 slices, how much is capital required for 5 slices? Okay, so again simple mathematics, it is known as grossing up. We are just grossing it up and making it equal to 5 slices, which comes to 2,703,125. Now divide this amount into new profit sharing ratio 12, 8 and 5, which is given here, 12, 8 and 5. Divide it by this, you get 1.297500 for A, 865 for B, and 546.25 for C. So this is the revised amount of capital or readjustment of the capital balances based on the old profit sharing ratio, so that the total amount of the capital is 2,703,125, which is this. Now let's discuss the second base. Second base is capital introduced by the new partner. We will base this 400,000 and we'll calculate capital of the firm in total. So this 400 was introduced for 1/5 share. Here we go. If this 400 is introduced for 1/5 share, means for 1 slice, how much should be for 5 slices? So divide it by 1, multiplied by 5. Grossing up, okay? It is just grossing up. So multiply it by 5. Total amount of capital should be 2 million under this formula. Okay? So either we will use this base or we will use base 2. So under this base 2, the total amount of capital should be 2 million. Divide this 2 million into 12, 8 and 5 ratio. You will get, yes, 960, 640 and 400 for A, B and C. So that total amount of capital is 2 million. Again, you have to gross up. But the base is C's capital. Now, the third base is total capital balance of the firm after admission. Means 1, 2 and 3 figures you will make total. This will become 2.562 million 500. Okay. So if your total capital balance should be equal to these 3 figures, it means 1 by 1, which is the same figure. So divide this with 12, 8 and 5 percentage or the ratio. What you get? 1.23 million, 0.82 million and 0.5125 million. So total comes to 2,562,500, which is in fact the total amount of capital. So this is how we work out the readjustment of capital balances of the partnership firm after having new partner in the firm. So the thing is, the important tips to remember in this module. Number one, that's a simple grossing. You have to gross up, okay? The base, grossing up, remember, grossing up. Gross up the base, you will get total amount of capital. And then divide that total amount of capital in the new profit sharing ratio, okay? Again, the difficult thing is mathematics. Accounting is not difficult. So please practice your mathematics thing, or otherwise have some money in your pocket for your younger siblings. Thank you.